You were at Solana before, Anna. What are you trying to build at Perena right now? What's the white space that you see? Where's the opportunity?
Yeah, so thanks for having me. While I was at Solana Foundation, I saw this huge inbound of interested issuers, both bank and non-bank stablecoin issuers wanting to launch on Solana, and that there's no infrastructure to help them grow or move money once they get on chain. So essentially, if you have just stablecoins but no liquidity to access other stablecoins or tokens or assets, you're kind of locked into your own ledger that is not any different than a bank having a centralized ledger. It's super important to have infrastructure similar to Visa and SWIFT that can help stablecoins trade and move and have people swap them. So Perena is building stablecoin infrastructure exactly for that.
When you think about new stablecoins, what are people really looking at creating? Because if you think about the stablecoins tied to the US dollar, for example, you've seen the big only get bigger and frankly more trustworthy because of that as well. They've had more and more disclosure. So why do we need more stablecoins, frankly? Where would you see more stablecoins being built?
Yeah, I think in a couple of areas. So one, if you look at traditional banking or fintechs, yes, there's always a couple of big players. However, there are always new players coming in. And in the stablecoin space, I think people are just starting to realize after seeing Tether's report and the Stripe and Bridge news that stablecoin is a highly profitable business, and it's only less than $200 billion in issuance, so it's actually really small space with a lot of potential. And fintechs like PayPal and many more that have announced publicly or shared with us confidentially that they want to launch stablecoins have seen this opportunity. On the other hand, I think there are a lot of non-US dollar stablecoin issuers that are eyeing the global market outside of the United States. Lastly, I think there's a lot of stablecoin innovation happening, both on chain, so to say, on the decentralized finance space, as well as in we call it Web 2.5. So it's kind of using blockchain, but with a more fintech and traditional lens in the regulated space. So all of these players are looking at different use cases, in addition to the majority majorly trading use case that's been powering USDT growth. Going forward, I think we'll have a lot more of the other use cases, both as from the B2B side to the P2P and B2C side. So all of these will need different types of stablecoins, both because of regional differences as well as use case differences.
Hey, and I'm wondering, in your view, if stablecoins have hit the mainstream. Sonali reminding me as we were preparing for this that JP Morgan does have its nascent JPM coin. But I'm wondering if we believe we're at a moment where this hits the mainstream, and if no, what will be the turning point?
Great question. I think not yet. We haven't hit that mainstream adoption. I think we're just seeing signs of getting to the tipping point where we'll see a pivotal moment in mass stablecoin adoption. There are a few things that need to happen. One is clear stablecoin regulation. The second thing is gas abstraction or some sort of better UI. So what I mean by gas abstraction is most public blockchains, so Onyx by JP is not one of them, but let's say Solana, Ethereum, so on and so forth, they have this concept of gas fees. So you're paying a transaction fee in what is not a stablecoin, oftentimes the blockchain's native token. So you have a lot of users who are new to stablecoins, and if they were exposed to a very Web3 native experience, they would be lost. So I think we need better UI, better product experiences, and often that means what it looks like on the front might be a fintech app, and that looks very similar to how people have been interacting with financial applications, but on the back end it's actually powered by stablecoins.
Right.
Lastly, I think why I'm so interested in building Perena is because there needs to be more infrastructure that specifically powers stablecoins and not meme coins or other tokens.
You know, I'm really interested in getting your view on this because one of those financial applications is election betting. When you think about the role of stablecoins and Polymarket and the recent questions that there have been about the surge in Trump bets, outsized trades really on Polymarket, what do you think this all means for the stablecoin industry ahead? Do you think that there could be a broader crackdown on who's using it and how they're using it?
I hope not, because that's pretty far from the main audience and main user base of people who are using stablecoins. Roughly speaking, as of now, and especially in the past, most people are using stablecoins. Probably half of them are using stablecoins for trading purposes. However, the other half are people, just mom and pop shops or suppliers in emerging markets trying to sell their goods cross-border and get paid, and they don't care about crypto trading. So if we blanket ban stablecoin usage and force everybody into a very limited set of KYC AML requirements that don't really suit an international user base, that would really hinder stablecoins adoption, both for good and for the maybe more speculative use cases that, objectively speaking, some of them are not bad, they're just a different type of use case. So for the betting ones, I think those are the types of users who would be betting regardless, and they're probably not the target use case that we're looking at, which is helping users and businesses swap stablecoins to get paid or pay others.